Hello, Maverick Traders. Welcome out to your Psychology Corner. Today, we're going to talk about first confirmation bias. And confirmation bias, anytime you have that word bias, that means that you're not looking at things reasonably and rationally, and you're not even considering the other side, right? You have dug in your heels, you believe in whatever it is you believe in, and you're not even considering that you might be wrong. And in trading, that can put you in a tough situation. Now, confirmation bias, we'll talk about what that bias is and what people that are stuck in that mode tend to do. As always, just a quick reminder that everything we go through is intended to be educational and investing involves risk. So, confirmation bias, this is the concept that comes from the field of cognitive psychology and has been adapted to behavioral finance. So it is something that happens in our brain, of course. And when we're thinking about finance, trading, there's behavior that's involved in your trading that you need to recognize. There are certain pitfalls, certain common mistakes that people make when it comes to behavioral finance. Because I feel this way, I act this way with my investments, right? It has to do with our profit taking. It has to do with us adding more to bad trades and making certain mistakes that are very common that can be very, very detrimental. So, what is confirmation bias? Well, it's basically seeking out information that supports your pre existing beliefs. You ignore information that contradicts and you go actively searching for information that supports your thesis, right? This is why Republicans watch Fox. This is why Democrats watch CNN. It's just that's the message that supports your pre existing beliefs. And the other party doesn't watch the other network and go, oh, they might have some good ideas, or let me look at this to kind of consider the other side. That's just not how it works. We don't consider, it's kind of, I'm right, they're wrong, right? So if I listen to the other side, it's only to poke holes in it and say, well, I'm going to try to jump on something they said that I can take advantage of, and I'll spin it and I'll, emphasize it and whatever, right? And so when Fox says something that they can change, well, they're going to pounce on it. When CNN says something, they're going to pounce on that, and that's I realize when you talk politics, I just offended everyone, but that's essentially seeking out information that supports your beliefs, ignoring anything that contradicts them. And you'll see this often in politics. Well, in trading, it can be the same thing, right? You have strong opinions about markets, whether stocks are good, stocks are bad. Well, this company, oh, it's good, it's bad. There's kind of these black and white type of answers when in reality, if we look at it openly, we could just say, well, what are the numbers? What are the actual details of it? Let's not seek information that just supports what we already believe. Let's just look at it as if we have if you really want to do it properly, go in with zero opinion and let the numbers and the details form your opinion. Now you're not looking at it with a bias. You're literally looking at it as a blank sheet. What does it tell me? And by the way, I might have formed an opinion. Well, when the numbers and the details change, I can change too, right? I don't have to stick with this belief, and I don't have to have a bias, and I don't have to go find information that keeps supporting this prior thesis. Sometimes the details simply change. So in trading, confirmation bias could be good or bad, and I'll talk about some of the positive aspects as well as the negative. So here we have Facebook. They changed their name to Meta Platforms. Why did they do that? Well, they're getting a lot of criticism, right? Um, Politically is a big part of that. Well, confirmation bias flourishes because it's an efficient way to process information. It promotes self esteem and it eases stress by eliminating conflict and contradictions. If I believe something, I'm happier when I'm with other people that have the same belief. right? If I'm with a lot of people that are saying things that I disagree with, that creates conflict, that creates some stress, that creates some anxiety, that creates some, anger potentially. It creates emotions. And so, of course, people, this is part of why we do it as humans. We want to feel good. And so, going and getting the information that we want will make us feel better. Now, by the way, confirmation bias can be a very good thing if you're in the right trade. It's kind of like, since I'm on a political discussion, well, it's interesting because when Obama was president, all the Republicans said this is terrible for stocks, and the stock market boomed. And then when Trump became president, all the Democrats said, well, this is terrible for stocks, and the stock market boomed. And literally, it could have been a situation where the market went up through both because it really didn't matter. It was more a question of the Fed, right? But politically they try to take credit, or they try to give the other one, like if the market goes down, everyone will blame the president that's on the other side. When the market goes up, everyone will give him credit if they're on their side. It's one of those games that they play when in reality it's the Fed. But my point is that this could be a good thing if you're in the right trade, meaning if you're in Tesla and you believe that Tesla is revolutionary, and oh, by the way, the chart keeps going up. Well, confirmation bias is kind of a good thing in that you keep seeking out opinions that support your bullish thesis. And oh, by the way, it's bullish. It's going to help you to make more money because you'll keep centered on that. When does the problem occur? Well, the problem occurs when this maybe stops going up, right? Well, now all of a sudden, oh no, it's great, and I seek more confirmation. What's interesting about it is the way that people behave, though. When the market is going up and something is confirming your bias, it's actually doing the right thing. Do you think they're as aggressive here as they are here? It's really quite interesting. When something is going against their bias, they get more aggressive. If you look at the statistics, if you look at history, it's when something is going against their bias that they fight. It's kind of that fight or flight response. When it's going up, it's like, well, I'm right, and I already got my dopamine hit from just being right. Hey, I love the company, it's going higher. I can count that as a success. So maybe I don't need to buy a lot of shares. But when a market's going down, it's interesting because if they really believe in it and it's going down, 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 this is when they can most get damaged and can get hurt. Oh, but it's a great company. It's this, it's that. And it goes lower, and pretty soon they're blown out of the trade and they have a huge loss. But this is where they took their big risk. It's all backwards. But when something is doing the opposite of your bias is when risks go up because it's not doing what you expected. But interestingly enough, that's where people fight it. That's where they dig in their heels. That's where they increase position sizes. So if you had hypothetically 100 shares of Tesla as it's going up, do you think they're buying 100 more and 100 more and 100 more? Not most people. No. Most people just content. They're here. It's confirming. They're making some money. They're happy enough. When it goes down and they own 100 shares, what do they say? Well, this is stupid. The market they have it all wrong. So they buy 100 more. It gets even worse. And now, well, the quickest way to get back to break, I better buy some more. And and uh-oh. And so all of a sudden, they're increasing their risks at the exact wrong time. Now, I'm using Tesla as an example. You can use anything, right? It doesn't matter. It's interesting that the natural instinct is to actually take more risk when you're wrong and to take less risk when you're right. So confirmation bias could be good if you're on the right side of the trade, I suppose, right? But it can be a very, very bad thing when it turns because your natural instinct is to fight against that. in an aggressive fashion. Investors should be aware of their tendency towards confirmation bias by, they could make poor decision making, missing chances, avoiding falling prey to bubbles and so forth. So, whatever it is, whatever your bias is, if you believe that XYZ company is a great company, well, why do you think that? Well, a lot of times it's not because of extensive research. It's just some weird opinion. It's like, hey, this company's been around forever. I'm very familiar with it. Its name has been in my head for many decades. So my feelings are just that it's a good company, right? That they've done no homework. They haven't looked at the fundamentals. If they did, they'd see that the revenues have been falling year after year after year. That's not a great company, by the way. This looks like GE from the last 5 years. General Electric, its revenues, massive decline. GE, well-known company. In your mind, if you've been around for multiple decades, you just think of, oh, General Electric, what a great company. It's been around forever. They do all these things. I own GE products, whatever. Not so great anymore, right? If you actually looked at the numbers, you could form a real opinion. But a lot of times you just have a pre-existing bias. It's just, hey, good company, bad company. How many people avoid investing in meta platforms, formerly known as Facebook? By the way, Facebook has flourished. This has been a fantastic company. What has its revenues look like? Boom, boom, boom. This company's making more every single year. Now, you might hate the way that they're making them. You might say, well, I can't support them or whatever. You might have some philosophy that, well, even though the company's clearly hitting on all cylinders, I don't like what they do, so I won't support. You can make some sort of argument that way. But a lot of people just go good and bad. Oh, GE, I'm familiar with. Great company, long term. It's been around for decades. Facebook, no, I hate what they do. They do this, they do that, and so you can't do that, right? That's a bias. You can't put them into good and bad just because of how you feel. There has to be a decision-making process that is, well, let's actually explore this as a blank sheet and say, is it good? Is it bad? Well, the numbers will bear that out, right? I can actually look at the fundamentals. I can go pull up their revenues and see if they're getting better or worse. I could look at their chart and it'll tell me a story about whether the stock is good or bad, right? And when it's good, I can trade it as though it's good, and when it's bad, I can trade it as though it's bad. I can go at it in a different fashion. Seeking out contrarian views, avoiding affirmative questions are two ways to counteract confirmation bias tendencies. So actually exploring the other side and going about it in a, hey, am I right? Well, let's explore that honestly. And let's really try to punch a hole in my pre-existing bias. How have people felt about the S&P 500 over the past decade? When I've talked to people, I obviously, what do you do for a living? Well, I trade and invest in the financial markets. Oh, guess what the underlying commentary has been for the past decade? Virtually everyone, the vast majority, say what? Oh, stocks are so risky. Oh, the market's about to crash. Oh, the Fed is going to blow everything up. It's kind of this negative bias, right? It is just, hey, I have this opinion. Now, is it backed by the numbers? No, the revenues of the S&P 500. If you add up all the revenues, which by the way is easy to do, how are all 500 companies performing as a whole? Guess what? Improving. I mean, it's been booming, right? And the market reflects that, and the economy's been strong, and unemployment's been going down pretty much, except for with the exception of 2020, and COVID hit. And oh, by the way, even from there, we printed mass amounts of money, and that's recovered rather quickly. But the underlying opinion has kind of been the market's going to crash, and then it doesn't. The market's going to crash, and then it doesn't. It's going to crash, and then it doesn't. It's going to crash. It's going to crash. It's going to crash. It's going to crash. And then finally COVID hits. Oh, see, I was right. And then oh, it's going to crash again. So the underlying, has it been loved or hated? It's been absolutely hated. Trust me. If you've talked to people over the last decade, just think about, people around you, their opinion of the stocks. Well, it is a little disconcerting to me that more and more people, if you look at the data, more and more people are warming up to stocks and opening, record amounts of opening of Robinhood accounts and so on. That does start to say, well, it is becoming more loved. Certainly, it is being embraced, which is exactly what higher prices will naturally do. They will draw attention. People don't like others to make money without them. And so, the sentiment is shifting some, no question. What about gold? Guess what? In 2011, at the absolute peak for gold, there was an investor survey of, it was for 401k participants, yada, yada, yada. Tens of thousands of people voted. And what do you think they predicted would be the best performing asset for the next 10 years? Gold. Okay. Gold would vastly outperform the S&P. Well, guess what? Gold has basically gone nowhere for the last decade. The S&P's up massively. So tell me, if you had a bias, how problematic is it? Could you have gone and found good news articles about gold? That Peter Schiff loves it and he's making this argument. And look at all the money printing. And you could have gone and found people to confirm your belief that gold should be doing better. Did that help you in any way, shape, or form? Okay. If you've been, just trying to buy gold nonstop for the last decade, and you've been ignoring that there's other markets out there and better markets because this one you think should crash and that one you think should flourish, a bias will get in your way of making money. And you just have to understand that. Oil, who could have foreseen that oil prices went negative? I mean, I didn't even, literally, I'd never considered that oil prices could go negative in the futures. I never went through a scenario in my mind where I thought, well, how could oil actually go negative in price? Well, apparently there is a way. The entire economy shuts down. Okay. They're dumping, you saw those dairies where they were dumping out milk in the middle of Wisconsin. They couldn't deliver them anywhere and it was going to spoil and so on. They were just dumping out milk. Well, the same thing was happening with oil. Nobody's flying, nobody's traveling, everyone's in their home when COVID, hit. And so oil prices plummeted. Their demand went to zero essentially, and there was massive supply deliverable. And if you own a future and you're long it, well, you're going to accept delivery. You have to accept that barrel of oil. So what happened? People didn't have a place to put the barrels of oil. So they literally were paying other people to take the delivery. They said, I can't accept the delivery. I don't have any place to put it. It's going to spoil. I'll pay you $20 a barrel for you to go get it. That's how oil goes negative. I hadn't even considered it. So is there any, bias in terms of oil prices, in terms of gasoline? Actually, since 2007, it's really interesting. There was such a, people spent so many years complaining about how high gas prices were that there became this feedback loop. And once oil started to crack after, again, 2011, 2012, oil prices were going down. I tell this story where it was probably 2012, 2013, wherever, could have been 2014 on this break. I don't know. But anyway, I remember it was around Thanksgiving time and I was at early morning basketball, and the dentist there, we spend more time chit-chatting than we do playing basketball, but he says, well, how do you buy oil? It's for sure going up. And then I went to Thanksgiving dinner, and a brother who doesn't do any, hey, how do we buy oil? Do we get in the future? What do we do? And I'm like, oil's breaking. They have no idea, but they're just biased to think that gas prices, oil prices, they have to go up. The sentiment that way was so strong, yet the price was breaking down. Those are the best trades. If you can be in a hated trade, one where everybody's on the other side of the opinion, but the chart is working. In this case, everybody's bullish on oil, but the chart's breaking down. What a great opportunity. And one of the best opportunities I've ever had for being bearish on energy. So a bias, you've got to be very careful. Interestingly enough, a bias can help you, I guess, if you're on the right side of the trade, to stay convicted in it, but it can get you into a lot of trouble on other situations. So confirmation bias, the tendency to seek out data you want, to interpret any new data as though it confirms your pre-existing beliefs. You'll just tweak it, you'll just massage it so that it confirms what you already believe. There's a natural response to avoid stress and conflict. So that's part of why naturally you just want to keep with that same opinion. This can promote poor decision making, result in missed opportunities. Confirmation bias, know what it is and look at it in your own trading.